Okay, fine. So welcome everyone to another episode of Smart Investing with Clem Chamber and Zach Meir. Clem, welcome to the show.
Thanks.
Okay, fine. So welcome everyone to there was
deja vu all over again.
All right, that's the best way to start the webinar. Okay. Well, Happy New Year, first of all, because that's the first episode.
22 is going to be great.
Okay, well, let's start from there. So we just had the Fed meeting yesterday. The minutes came out and tech stock obviously were impacted. They went down, and also today the London stock market doesn't look really shiny, let's say, even though
it's only down 23 points. It was down 100 and before the open on the futures, and now it's down 23 because, I mean, at the end of the day, the Fed came out and said, oh, we're going to be running down our balance sheet, which means tightening. But it doesn't really, because nobody believes them, because they can't. Because if they did, they would unwind all the things that they've done in the last 2 years, keeping the economy afloat. They would, run down their balance sheet by 4 trillion and destroy the economies of the Western world. And they're not going to do that now, are they? When all they've got to do is go, oh, we're worried about inflation. Oh, we're so worried about inflation. Oh, we've got to do something about inflation. It's not us, it's them over there. Oh, it's this, it's that. Oh, we're working on it. We're doing this, we're doing that. And then they don't. So so that's the environment that the market is saying we're in.
Okay, so you're not going to see anything kind of dramatic going on from,
Well, I think we will see dramatic things, as in drama, i.e. fantasy. And I think we will see them jawboning a lot to try to get inflation expectations down, because they believe that inflation expectations is what drives inflation. Yeah, right. But it's debasement of currency that drives inflation. And they've done that for a good reason, because if they hadn't done that, with all the lockdowns and all the COVID things that had to go through to stop it spreading, would have absolutely wiped out the economies of the Western world, because everybody would have gone bust. So they printed $4 or $5 trillion and pumped it into their economy, new money, to bail everybody out. And Europe has done the same, and the UK's done the same, and Japan's done the same, and China's done the same, and India's done. Everybody's done it. But they can't put it back, because underneath all of this is a dirty great hole they dug in 2020 and 21 by locking everybody up. Yeah. And that was a destruction of wealth. And because of that, if any business lost those sales in any 1 year, they'd go bust. But the whole economy lost those sales in 1 year, and it would go bust. But they printed new money and kept it going. They kicked the can down the road, and they will have to continue to kick the can down the road. Otherwise, the train comes off the tracks and everybody dies. And they're not going to do that. But of course, if they say, oh, yeah, well, we're going to have inflation for the next 4 or 5 years, and we're going to debase the currency by 50% because that's the only way out, everyone's going to lose their minds. Everyone's going to rush out and buy houses and gold, and there will be a vast explosion of instability. So they're saying, oh, we've got to keep it down. Oh, we fudged the figures, by the way. Inflation really isn't 14%, it is 6. And try to keep the lid on it. And they will keep the lid on it, but they're not going to. The politicians aren't going to get kicked out because they're responsible for crashing the whole of the economy, crashing house prices, crashing the stock market, everybody going into the deepest recession since 1930. They're not going to do that.
They can't fight a system they actually create. So
well, they can, but they won't.
Yeah.
I mean, new monetary theory says, oh, you can do all this. It's not a problem. When you get inflation, you just tax it away. And that's quite right. But the politicians will go, yay, let's print money. Yay, let's spend more money. Oh, we've got inflation. Let's tax. No, let's not tax it away. No, we don't like the bit. We like the good news, but we don't want the bad news. So, we've had the good news of the governments and central banks of the world didn't let everybody fall into a huge smoking crater of economic collapse. Not that they didn't cause it by lockdowns, but that's the price we paid for saving our old people. But the flip side of it is to dig back out of that hole, to climb back out. Yeah, you've got to do it slowly. You can't just say, oh, well, now we're going to jack up interest rates and, we've got to pay the piper. Well, no, you've not got to pay the piper. You pay the piper with inflation over 5 years. And that's the road we're on. We're paying the piper through a tax called inflation, which is a stealth tax that people don't really notice. They go, oh, my sausages went up. Oh, I got a pay rise. Oh, and cars are more expensive. Oh, 10% more expensive. Oh, is it? Isn't it? I don't know. I can't do maths. I'm the general population. I'm enumerate. Is it really going on? I don't know. Oh. And 5 years later, they're all earning 60% more. The houses are worth 60% more, and their currency is worth half. So they're worse off, but they look at their house. My house is now worth £1 million.
Yeah, exactly.
And they feel rich. So it's a trick. It's an old trick. Goes as back as far as the Roman Empire. It's an old financial magic trick, and it's going to be played on everybody. But it's the only way out of the whacking, great, disastrous financial hole that the COVID measures forced upon everybody. And everybody was quite happy to pay that price. Well, now it's here.
Zach, welcome to the show.
I wasn't happy to pay the price. I'm still not happy to pay the price. I don't know why the Fed keeps saying they're going to raise rates and everything else, but they can't do that. They have spent 13 years not raising rates to avoid a calamity. And then they say, all right, now we can raise rates to create a calamity. That doesn't make any sense whatsoever, does it?
Well, they can raise rates, but it doesn't mean there'll be a shortage of money. And so they doubled interest rates for the next 3 years.
No, it's the wrong cure. It's the wrong cure for the disease anyway. I don't think raising interest rates actually, I don't think it ever did what people wanted it to do. The only thing it did in the 80s was make businesses go bust, and then new businesses start, etc., etc. But I don't think it actually, I think it's always the wrong cure. It's always been the wrong cure for the disease. And I think that it's been much better since they stopped using rates as a sort of sadistic way of punishing people for making too much money. I think it just doesn't. It's nothing to do. It's just it's the wrong. It's like taking an aspirin for COVID. It's nothing to do with what actually probably works quite well actually, but it's nothing to do with what. Yeah, exactly. I just think that this is just complete. It's a fiasco, and I wouldn't even listen to. I wouldn't listen to the Fed. I wouldn't listen to what they're saying at all. I don't think this has any relevance.
Zach, I think this is a great point. We are not going to listen to the Fed, okay? I kind of like that. So
I don't know why people keep talking. I don't know why people keep. I stopped watching Bloomberg and CNBC.
It's everywhere.
Because all the macro babble has always been wrong. I mean, it's complete rubbish. I mean, it's what's his name, Jim Cramer and all those people, they're rubbish. I mean, Jim Cramer thought Elizabeth Holmes was the next Steve Jobs. I mean, that says it all really. I mean, it's absolute rubbish. I don't know what the point of those, I don't know why people actually put them on. I mean, but you go to any investment house and they have Bloomberg on in the background, everything else. I'm sure the value from Bloomberg doesn't come from the rubbish that the macro babble. Just forget about macro babble. Talk about individual opportunities, individual stocks.
Exactly.
Whether you think gold will finally go up, or crypto is a buy here at 43,000, or whatever it is. All the explanations for it are totally meaningless. They always have been. In fact, let's say they especially became meaningless from 2008. I think until that time, maybe if you read an economics textbook, it might give you some value, or you did a degree in that. But since then, I mean, it's nothing to do with anything. I would hope that Clem would agree with me at least partly on that basis. It's nothing to do with it's just like somebody would have said 20 years ago. Financial website. Is that going to be any good? And some people would say it's fantastic. Some people said it's rubbish.
Well, in fact, hardly anybody said it was going to be fantastic. People in the city thought it was a mad idea.
Yeah.
Yes, exactly. It's like who's going to look at a financial website when you've got the newspapers? I mean, why would anybody? You've got the Daily Telegraph and the Times. Why would you look at a financial website? What are you talking about? And why would you want real-time data? You know, so you make money properly by investing on a 3-month basis or 6-month basis.
Exactly.
Or
But, you know,
3-year
another
basis.
thing, why do you look at bulletin boards? Why do you look at investor chart? And, you know, now we have got a company listed on the Nasdaq.
I would say it depends what kind of investor you are. Even are you an investor? If you're a trader, that's again completely different. I mean, if you're going to get a 300-point drop because Jay Powell said something, that's a nice fat profit there. If you're selling calls or buying puts or whatever, this is all important stuff. However, in the long term, if you're a long-term investor, then there's another way of looking at it. I look at it. When I was 11 years old, my father was a big commodity speculator, and he was doing well. When I said to him, I said, "Dad, how do you do this? How does it work?" And he said, "All you need to know is whether the market's going up or down. You don't need to know anything else. That's all you got to know. Is it going up or is it going down? And then you position yourself accordingly." And I thought, as an 11-year-old, I thought, my dad's a fool. It can't be that easy. Well, of course, it is that easy, because to know whether the market's going up or down is actually really fabulously difficult. And of course, the biggest influence on the direction of the market is monetary policy. Because if money's coming into the system, your assets are going to go up. If money's going out of the system, your market assets are going to go down. Now, what the Fed has said is they're going to be pulling money out by bringing down their balance sheet. Now, the point is, you've got to decide whether they can do it, will do it, whether they're lying, telling the truth, or maybe saying it in a way where they can say, "Oh no, we didn't do that, we meant this." So you end up reading the tea leaves, and you try to make up your mind on whether there's going to be money coming into the system or money going out of the system. Well, there's money coming into the system until the taper completes. Well, that's March or April. Yeah, and if we get another COVID thing, it's going to be indefinitely. Yeah, and then interest rates are going to go up. But is the amount of money in the system going to go down or up or sideways? Yeah, because money up, market up, sideways, market sideways, down, market down. Well, I think we're going to be going mildly up, because ultimately, because they've got, they can crash the market tomorrow. They can just say, "Oh, we want all our, we want all our bonds back. We want to take all your bonds. Have all your mortgage bonds. We're not taking any more of that mortgage bond stuff. We want you to buy it back off us." Bang! It all go down in a smoking crater. But that's not what they're there to do. They've stepped in and bailed out the whole of the American economy, and all the central banks have bailed out the whole of the world economy by inflating the currency, debasing their currency. Now, are they going to reverse that process? No. Are they going to say they're going to carry on printing? No, they can't, because everyone's going to get upset with inflation because it's a tax. Nobody wants the tax. Yeah, so they're going to say, "Well, we're thinking about it, and inflation, well, it's not going to be there for long. Oh, well, maybe it's going to be for long, but it's not going to be so high. And as time ticks on, oh, well, it's not our fault, it's coming from here, but that's going to stop." And then it doesn't stop. "Oh, we're going to increase inflation rate, interest rates." So they put them up from nothing to twice times nothing. "Oh, we're going to lower our balance sheet." Well, actually, all they do is they change the maturity rate on the balance sheet, and therefore it looks smaller, but actually it's the same, and so on and so forth, until they get to the stage they go, well, we've got our national debt to GDP back in line, because obviously inflation makes your GDP go up and makes the debt that you've got, it doesn't have to go up, although it probably will. Yeah, but it gets back in line, it gets under 100%, gets back, but the economists say you need to have it at for optimum growth. And then they go, yeah, we're not going to print any more money then. Bang, and then you might see some tightening.
Yeah, but Clem, what disease were they trying to cure?
Well,
in 2008, what were they trying to prevent? We're trying to prevent Goldman Sachs going bust, or what were they trying to do? Were they trying to prevent people losing their houses?
Let me ask you this, Zach. How much of your capital is tied up in your
house?
A percentage is okay.
No, I mean, let's say a third. Let's say, actually, in my case, a bit weird, but let's say it's half.
All that would have gone away.
I don't care.
You don't care if your house is worthless. You don't care if they're repossessing you on your mortgage.
I don't care. My bad luck. I bought it at the wrong time. I bought the wrong price.
I don't know what's wrong. I think most people would be quite happy that didn't occur, and that they weren't made unemployed, and that there wasn't a financial collapse, and that we didn't go back to the dark ages. Most people are quite happy with that.
Yeah, but we
I can
don't. Yeah,
understand
but we
you
don't
might
even
be a
know.
bit annoyed.
Yeah, yeah, no, but we might have made. Yeah, but then if the market, if there had been a collapse, I might have been able to buy a property rather than for 250 grand for 50 grand, and now it would be worth $1 million, and I'd be much better off. So you know,
you wouldn't have had any money because all the banks would have gone bust, and you wouldn't have had any money. What are you going to buy it with?
Yeah.
A jar of 50p coins in your kitchen.
Yeah, but
the whole financial system stops.
No, all I'm saying now, I understand what you're saying. All I'm saying is I'm anti-interventionist. I'm pro, you know, just much more pure capitalism. I don't believe in this Marxist capitalism that we have, and you know, the government deciding, you know, all these things. I don't believe in all that. So that's why
the whole purpose of government is to intervene when nobody else can. Yeah, and that was a perfect example of that instance. Lender of last resort. Okay, and if you don't have that, you go back to what the Americans were suffering at the last part of the 19th century with all their panics, when it's all private sector and the whole economy would come off the rails for 2 or 3 years at a time, and everybody would starve, and there'd be terrible, terrible times. And you know, hard times, government stepped in and made things like the Federal Reserve to try to stop those disjunctions, those dysfunctions, those system breakdowns. And they've tried very hard, and sometimes they get it right, sometimes they get it wrong. I think anyway.
I don't trust the judgment of governments. I just think they normally get it wrong.
Well,
they got it wrong. They got it wrong. They've got it wrong. I think they got it wrong on COVID. I think they'll get it wrong on this thing. They'll probably inadvertently crash the economy, or they create, you know, asset bubbles which are completely unfair and idiotic. You have some muppet who's like buys a house and, you know, and makes millions, but you have other people working and they make nothing at all. That's the sort of thing that we've had, and I just don't agree with the government intervention.
Well, all those people that didn't make money out of the financial markets since 2008, they weren't watching shows like this. They weren't opening online financial sites like mine. They weren't paying attention, and they suffered. So the flip side is it's still today open for anybody to buy an Apple share. Now they're 3 trillion. It was for the last 10 years, you could have bought $1,000 of Apple and made $12,000. Everybody was telling you to do so. And the people that didn't, they got nobody to blame but themselves.
All right.
Including myself. I never bought Apple.
So if we are not listening at the government and we are taking that out of the picture, what are the things we should be looking at? Where we should be taking our information? I mean, what investors are going to be doing?
Well, you've got to get a map, haven't you? And that's what people who are watching this are trying to get, a map of the future, so that they can zig here and zag there, and they can.
Where do I get the map, Clem?
What's that?
Where do I get a map?
I keep showing it to you. But my map's not necessarily that accurate. I keep modifying it when people fall off cliffs and say, "You said on the cliff." I go, "Oh, well, I'll draw that in." But you know, that's what we are all trying to all the time orientate ourselves. Well, certainly if you're in the markets, because you know the markets don't listen to you. Yeah, and you have this model, and you'll be completely blooming wrong. Like I would say, I've been completely wrong about gold. It hasn't actually gone down, and it maybe I'm going to be proved right, but later. But you have a theory, and you put it out there, and you watch it, and you see what happens, and you say, I'm right, tick, 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 or, oh no, cross. But it's all there for you to actually adapt to and play to. Oh, well, I'm going to open this sort of trading account. Well, that's a bad move, I found out later. Or I'm going to do it this way.
I think it's quite funny about gold, because I think this year is the year I would actually agree with you. I think for me, the gold buy signal was when Goldman Sachs said that Bitcoin is going to be the new gold. So I think that for me is like a fantastic buy signal for gold, because I don't remember Goldman Sachs being right on any of their big calls ever.
Yeah,
well, they are always right, because they tell you to sell what they want to buy, and they tell you to buy what they want to sell.
Well, that's I was trying to get out of the conspiracy theory thing, but there's
no conspiracy. That's only them doing it. That's called the sell side. There's a sell side and a buy side.
No, I mean, it was a bit like with this. It was a bit like with this latest Omicron thing. Literally a day or two, I think the Omicron thing broke on Thanksgiving, at the end of Thanksgiving Day, because obviously that's the time when the market could be caught off guard. So the market crashed, 3% on that day. But literally the day after, Putin said, "Oh, I'm not. Omicron is actually a free live vaccine, so it's not a problem at all." And he was absolutely right. He had no agenda in saying that, apart from just like upsetting the West. And so, for me, buying the FTSE at 7,000 at that time with that kind of triangulation was the thing to do. And even today, it hasn't looked, even after the Fed thing, the rubbish Fed thing yesterday, apparently, we're still way above where we were then. So I think it's the way you analyze the information that comes in front of you and who's saying it with which agenda, just like that Goldman Sachs thing. For me now, I'm actually with Clem, long of gold because of Goldman Sachs saying that Bitcoin is going to be the new gold. And so just as I was with Putin, because he said it was a live, Omicron's a live vaccine, and it is. They're still trying to keep it going here, and I think it's rubbish. But the good thing is, the more they try and keep it going, the better that is for the stock market, because the stock market is not quite as stupid as the mere mortals, and they'll just keep buying the dips, the Omicron scare dips.
Okay, so I kind of like you brought up Goldman Sachs and Bitcoin, because we are basically in a bear, we are entering a bear market, or we are in a bear market.
Well, I'm not so sure. I mean, with crypto, we're definitely in a bear market.
Yeah.
And I think what I was predicting for the first crash that got turned around by the institutions, I think they're going to get sick.
Yeah.
And then that's going to present a fabulous opportunity to slowly cost average in at around 20,000, somewhere between 10 and 20,000, and that's what I'm going to do.
Okay.
But I think
but I don't even. I think that saying that crypto's in a bear market is like saying the FTSE's in a bear market. The real opportunities normally are on the small end of the scale. And so since I started doing this, I keep looking at the Binance page and see the top risers there, which are up 10%, 20%, see if they've got a good chart. And that's just, for me, the equivalent of small caps on AIM.
I think that's totally right. I think that's totally right. And
you would just, forget the FTSE being up or down, forget Bitcoin being up or down. You're not going to be buying 43,000, Bitcoin at 43,000 anyway. It's so big. You want to go for the small stuff, which has got the best risk reward.
Unless you are MicroStrategy, Zach.
Sorry?
The way that I see it is slightly different. Zach's totally right. If you want the alpha, go picking small cryptos that are going places. And, Umbria, which I can't talk about, is just that sort of thing, and it's been doing very well because it's on liftoff. No one's heard of it. Yeah. And when they have heard of it, if it carries on going, it will. I've
never heard anybody talk so much about something that they're not supposed to talk about. It is quite fantastic.
Well, moving along from that, but that's an example of small tokens, and there's quite a few out there. Well, it's not. There's a lot of them out there, and you have to, go pick them all apart and see which ones win. But the big stuff, Bitcoin, when Bitcoin's under 20,000. That will be a fantastic opportunity, because at some point that's going to go to 100,000 in the next 5 years. And so 4 or 5 times your money over 4 or 5 years, I'll be buying that all day long.
Yeah.
I mean, most people don't like that idea. What do you mean 5 times in 5 years? I want 10 times this year. Or 100 times this year. Yeah, no.
Yeah. I mean, one of the issues is actually, the majority of people, they have heard only of the big crypto. So that's why, that they look at Bitcoin, Ethereum, I mean, perhaps some other bigger one, they find it very hard to find the small caps.
If you're new to crypto, you should really not, it's a learning curve. You shouldn't be playing with proper money anyway. And you should be dabbling with tiny sums on an exchange like Binance and playing with all sorts of stuff and just learning it, because there's such a learning curve. But, if you spent a year on the learning curve or 2 years on the learning curve, you're not going to miss out on much, because this is going to go for decades. So, getting in now, it's like playing with Microsoft in 1983.
Yeah, exactly. Okay. So if we go back a bit on equity, maybe Zach, you have got some small cap that you want to share with us, and before that, I'm just going to make a suggestion here. I'm not sure if it's a company that you look at. It's called Atom.
Right.
ATOME. Think
Yeah, I've heard of it. I can't actually remember. I can't remember what it does now because obviously I'm overloaded.
It was in all the green energy sustainability. It was a new IPO, so I thought you might be looking at that.
Well, the IPO of today was Hydrogen
Okay.
Utopia, which is waste plastic to hydrogen. So then there's this a big kit. You put your waste plastic in the kiln, and it comes out as hydrogen. Breathe it in.
It's going to go up with a squeaky pop.
Yeah, exactly, and make balloons or whatever they do, or zeppelins. And so basically, what was good today is that it listed at Hydrogen Utopia on the Aquis Exchange (HUI), listed at 7.5p at 8 o'clock this morning, and lo and behold, at the moment, I think it's at 13p, which is, I think, amazing and wonderful because once on the Aquis Exchange, which is about as busy as
the coffee shop.
the analogy. About as busy as inner Mongolia or outer Mongolia. So that's
where the Bitcoin miners are. Don't diss that. Don't diss Mongolia. It's one of the biggest natural resource areas in the whole world.
It's about. So it was on the
very
Aquis
busy.
Exchange, despite being on the Aquis Exchange and despite it being like we're not supposed to be doing very well on IPOs. It's nearly doubled on the day. So I think congratulations to them. Over Christmas, when I was bored and staring out the window, I did a top 20 for 2022. And the number 2 stock was Wishbone Gold. And number 1 was Eurasia. And because I thought, I finally capitulated on the Clem front. So precious metals, etc. So I think Wishbone is a small one. Eurasia is the 700 million pounds. So it's not a small company, but Eurasia actually just talked about introducing a dividend, which is actually good timing for my call, because that does make it look rather prescient. But Wishbone Gold, Australian gold miner, and I think it's looking, that's something that is worth researching a bit more and just seeing. It's like 8, 9, 10p at the moment. So those two, so the gold play I'm into, and the other ones, I think I still probably still like Pires. I think that went up. Seed Innovation, that went up. The tech plays, I think that was good. And I'm not sure if I've got any particularly new ones. Quantum blockchain, I still like that because of the quantum computing. So pretty consistent, I think, in terms of that. But I think it'd be good to have, or good to know, a company which was good on crypto. Apart from the one that Clem always doesn't mention, in terms of having a stock which was a decent crypto proxy. I think that's something that I think people would like and appreciate. I'm not sure.
Maybe not such a good one right now. Not for the next few weeks, anyway.
Is that well, I think you have maybe perhaps you have to look at Canada and America. On the London market, there are a few, but we said many times that we don't get so much excitement on the London market. Perhaps we have.
I would say this: no, don't buy your Bitcoin in equities. Go out there, get your wallets, skill up, do your study. Spend a year digging deep. And then at the end of that, you'll be tooled up to make serious money in the next 10, 20, 30 till you drop dead. Because crypto is a whole new financial sector. It's a whole new thing. And trying to make it easy for yourself is not the road to wealth on crypto. The road to wealth on crypto is to get skilled up.
Yeah.
But I mean, I had to boil my brain for 6 months just to feel like I wasn't a complete idiot in the area. And I'm not a newbie in anything. So you just have to face the horrific steep learning curve. You just have to face that, and you have to climb up it, because at the top of it is huge pots of gold, and it's worthwhile.
Yeah, I agree with you.
No, I think it's probably taken both Clem and I 30 years to get into, to be familiar with the stock market. I suppose we haven't got 30 years to get familiar with
but
the
Zach,
crypto
I
world,
think
but you need time. You do need time.
Yeah, you need time, but if you want to use a stock as a proxy, then I think the criteria that I would be using is really like investing in the people that are running the company, and they are going to be the one they can see ahead. They are going to look at the right projects. So that would be more maybe the approach, rather than what this company is doing is in Bitcoin mining, is in DeFi. Then I'm going to go into that, because they might.
It's a bit like the the Tap Global people the other week, that they're a trading platform, so they're going to be busy with people trading crypto, so that's the picks and shovels of the crypto space, which may be a safer thing for people to digest than just trying to work out where Bitcoin is going. And they're expanding.
I completely disagree, because at the end of the day, markets are like poker games. If you can't see the fool at the table, it's you, right? And if you're going to play a game, you've got to be good at it. You can't expect to win in this cutthroat arena if you're not skilled. So if you're going to get skilled in crypto, trade it natively. I mean, yes, okay, you don't want to do all that, can't be asked, and you want equity for it, I suppose so, why not? But and then it becomes a part of a diversified portfolio risk and all that malarkey, I guess so. But it's just such an opportunity. It's almost negligent not to learn up on it. It's like, don't you want to make a fortune? Oh, you don't. You are. Okay. And I can't tell you how many people I've had that conversation with. I've been like telling people for 3 or 4 years. In fact, all my people at ADVFN, and I've been absolutely pushing it in their face. Do they want to know? No. They want their equities, or they don't want to. I mean, people I've employed, hundreds and hundreds of people at ADVFN over the years, 95% of them want absolutely nothing to do with buying and selling shares. Don't want anything to do with it. Want a salary? That's all they want. They don't want to be an entrepreneur. That's all they want, is to have a salary. They don't want to buy and sell shares. They don't want to do anything with money. They do not want to get in the zone. And if you're not in the zone, you are never going to escape that world of wage slavery.
It's just clear, when you are in the zone, it's not always a comfortable zone. Actually, it's always uncomfortable.
Oh, give me comfort. Oh, mummy.
No, everybody likes that.
Mummy, I'm poor, mummy. Can I have some money? Free money, please.
Exactly.
No, that's really not going to get you where you dream you want to be.
Okay, so basically, go out hunting, and a part of crypto. What about ESG and space, and the space industry, which has been considered two of the biggest trends of 2022? Do you see them kind of gathering momentum, or perhaps ESG has been already gathering momentum?
Don't mention ESG to Zach, otherwise he'll his eyes will roll to the back of his head and he'll start frothing at the mouth.
Exactly.
You're right. Can't stand ESG. I think it's complete. It's just another bit of red tape for companies to have to sift through and waste money for shareholders having to do all these ESG reports and all the other rubbish that's in there. Complete waste of money. It's a complete disaster. Just a bit of treacle for people to swim through.
But this is where the government is putting money, is investing, is green economy, and soon is going to be space. Or
it's just another more business for lawyers and accountants and all the other parasites in the financial space.
Gosh.
We had global warming before, then it became climate change, then it became this, then it became that. I remember when I was young, they said, wait a minute, all this sort of stuff, right? I remember when I was young in the 70s, they said, by the year 2000, there'll be an ice age, we'll run out of oil, there'll be no copper, there'll be this, there'll be that, we'll be driving electric cars. All these predictions, every single one has been absolutely wrong, completely wrong. Totally idiotic.
I hear something.
Who voted for ESG? Who said let's bring on ESG? I didn't see that in anybody's manifesto. They just bring these things on without any discussion. It's just assumed. Right, there's climate change. There's this. There's that. Now there's the vaccine. Everybody has to have a vaccine. It doesn't matter who you are, whether you like it or not, whether it'll kill you. You just have to do it. That's not a democracy. That's not the way things should work. It's completely wrong.
Yeah.
I mean, that, you know, like that, our friend Djokovic in Australia. I mean, it's like, what the hell's going on?
Yeah, but the same is going to happen here. Well, I mean, Boris said you need to have the complete vaccination course, otherwise the problem with traveling. I mean, are you going to...
But I would just say, I don't want, that's fine. I don't want to travel. I'm not traveling ever again. Thank you very much. I'm not playing that game. Not interested. It's just, I don't know why people just accept these things like, you know, just like zombies. It's unbelievable. The only good thing about the financial area is that you still have a chance of being able to have an independent mind and do things, you know, like, you know, just say, I think, you know, Omicron, they did it on Thanksgiving, so they were trying to pull the market down when there were no buyers. Okay, I got it. That means it's a buy. The FTSE 7,000 is a buy. That was, you know, that was obvious, you know, to me at that time. And now we've got the wall of worry with Omicron that, you know, we know it's rubbish. It's just a cold, and any negativity in the market is a buy opportunity. Same with the Fed. They can't do anything, because if they do anything, it will just collapse. So whatever they say, whatever they said last night, it's a buy opportunity, and that's it. And so you just have to have independent thinking. Thank God in this area you can have independent thinking, whereas nobody can say ESG is rubbish, nobody can say, you know, the vaccine's rubbish, nobody can say, you know, you can't say those things. But you can, at least in the market, you have some freedom of thought, freedom to make money, which I think that's why I like the financial market.
Yeah, until the tax comes after you.
Well, no, I mean, until the tax.
The tax, man.
What did you say?
No, until the tax.
Oh, no, well, no, that's even better. Actually, that's even more interesting, because don't get me on that one, because all the spread betting companies, because, you know, it's free from tax. They've now made it so that the margins are so high that you might as well buy the shares, because any advantage that you have from, you know, tax-free trading through them. I mean, they seem to be hand in hand with HMRC. I mean, they are completely, and then you have a position with them. And then what they just say, if you don't send us 20% more margin, we will close your position out for you. So it's like, whose trade is anyway? Whose money is it anyway? I mean, all these things are completely draconian. I mean, I'm really, you know, I'm an angry old man. I mean, this is tough. You know, so yeah, exactly. That's
Zaki's Grumpenstein.
Everything is literally, it's complete. I don't know. I think we're all sheep and we're just taking it. I don't know. I don't see. At some point, I think people will crack. I mean, I think it's getting to a ridiculous stage. Pretty soon they'll say, if it's raining and if you don't have an umbrella, you'll be fine. I mean, it'll be like that. It's going to be. We're going down that road of completely.
I think that's totally right. I think people should be fine for not having an umbrella. I mean, you know, think of all the damage gets done to their hairdos.
Exactly, you get, you know, just like it's a, you know, if it's below 5 degrees, if you're not wearing an overcoat, you're fine. You're arrested, because you
might get a cold and strain the NHS.
Exactly. Yes. Exactly. Yes. With our 2.6 beds per million people, which is half of what we had 30 years ago. Half of what we had 30 years ago. Unbelievable. You know, 10 million more people and half the amount of beds than there were 30 years ago. So we have to close down the country and destroy our economy, because somebody is not able to provide enough beds or produce a proper NHS.
They're spending more money.
On people, the trust managers getting 250 grand a year. It's worse than AIM.
I have no words.
I've got a solution. You know, don't go see the doctor. Just stay at home.
Okay, Clem, what's the solution?
Don't go to the doctor. Just stay at home.
Oh, listen, by the way, I think that's
for me my whole life.
No, I said don't get tested, and if you're ill, don't go to hospital. That's what I would do.
Yeah.
Die at home.
And I mean,
so anyway, you can see Zach is an anarchist, a libertarian anarchist.
No, I'm a capitalist, and I'm a capitalist. That's it.
Okay,
a freedom of speech. And I'm a capitalist and a Democrat and a freedom of speech.
You poor capitalist! Don't you realise capitalism's been dead for 30 years?
No, we're in a Marxist tyranny. I know that. Yes, I already know that. It's fine.
Okay. Well, so what are we gonna leave investors with a part of this? You know.
Well, in this Marxist tyranny, people should absolutely study up on crypto, because it's a fantastic opportunity to leap the Iron Curtain. And so, I mean, that's the way to go. And I think this year we're going to see a gentle uprise of the FTSE. It's going to be some bumps, but we're going up an amount. And an old indicator of how good a year is going to be is what happens in the first 2 days. And we had two strong first 2 days, very strong first day. Yeah. And that is because institutions, you know, they've been sat there not doing any holidays in their mince pies, but they've got their plans. So on Monday they go, we've got to do a little bit of catch up on what we're going to do this year. And it gives a signal on what's going on. And I think we're going to have a reasonably positive year. It's going to be a little bit of a bumpy ride. And, you know, the thing that we've got to hope for is that the next COVID variant, which will have to be more contagious than Omicron to actually happen, won't be more dangerous. That's the only little dark cloud.
I mean, we already knew beforehand from the Spanish flu, etc., that the evolution of viruses, that it becomes more contagious and less deadly, and that's exactly.
Well, very lucky that it happened so fast, because I can tell you, smallpox kept the world in the Dark Ages for 1,000 years.
Yeah, well,
and didn't get any noticeably less lethal.
Yeah. So Clem, you still bullish on gold in 2022?
You know, I can't stop buying it. I hate myself for it, but I keep buying it. Okay. And so, you know, I feel that there's, I mean, what I've ascertained, because it is a riddle, one of the important things about gold is 50% of its usage of the production goes into jewelry. And the demand for jewelry halved at the beginning of the COVID crisis. And it's still not back, it's still like 15% down. So if you imagine you had a commodity where you've got a 20% drop in consumption or 5% overall drop, or whatever that number pans out to be, you would expect that price to be down, but it isn't down because demand from central banks and from people who want to investigate inflation has kind of counterbalanced that drop in jewelry demand, which is huge. So we're now in balance. Inflation's not going to go away, so that demand's going to remain, but people are going to be out and about, touch wood, with Omicron not being supplanted by something nasty. And people will go out and they will buy their jewelry, and that demand will come back. Yeah. So there will then be a net increase in demand from where we were in 2019. So you'd expect in the next 6 months for it to go through $2,000. That's my current wild theory on the matter.
And going back to crypto, you might see
under 20,000 on Bitcoin very, very soon.
Okay, awesome. Zach, anything?
No, it won't be awesome. And
I'm saying because that's so, selfish, like awesome, so I can get it.
Awesome. It will be epic, not awesome.
Yeah, exactly, epic. Sometimes I have to pay attention on my expression. Anyway, Zach, you are a bit more positive, or you still want to?
I'm really positive that this webinar is, going to end, so I can beat myself with a stick, to make myself feel better. But the two things.
It's cheaper than paying for it, like you normally do.
Yeah, the wishbone gold. That's the gold minnow. So that's me capitulating on the side of Clem, and then I think the IPO of the day. I think it's just, as I said, amazing that you've got an IPO starting off so well. And normally in this market, if something starts off well like that, it continues. It doesn't sort of like go from 7p to 13p, then back to 2p. I think that is quite significant. It has all the ESG stuff that you young trendy people like, and saving the planet, all that sort of stuff. So hydrogen, go with hydrogen, and I think those are my two. I don't want to.
I think it's a very interesting concept. Taking CO2, mixing it with hydrogen, which you get from solar, obviously. So you take CO2 out, well, that's a benefit. You probably get carbon credits for that, and you make energy. So that sounds pretty excellent.
But also, I think it's interesting what you said about stock going up on Aquis, because perhaps we are going to see, a stock exchange, a segment of the stock exchange that is a bit busier, and it can get.
Aquis is quite sharp these days. They've got new management over the last few years, and they are they're quite a force. They're not your average city muppets. They are they know what they're doing, and they're doing it, and they're making it happen. And that's a big change from all the plus markets and whatever they were called, OFX and all that malarkey, whatever they were called over the years, all their multiple changes, they've now got some sharp people behind it. And you might have noticed that AIM was on its knees, was about to go away and was about to be sold off and got rid of. Well, that's all changed now, because they then said that the standard list, you've got to have millions and billions to list on the standard list, which implies go to AIM. Yeah. So AIM, it has, is on the comeback road. And I think to an extent, because of plus markets making such a good fist of it, they said, maybe we don't want to get out because after all, we've got some competition here. Now we have to kind of get our skates on. So, they are good. Aquis, it's another stock, AIM stock, worth watching. I don't own any, but I've been tempted on many occasions.
That's a good point. That's a good point. Okay. Listen, thank you so much for coming on today, and I hope that all the listeners enjoy the show with Zach being so bad.
Mr. Grumpy.
It's brilliant. It's been brilliant. I never see you like so convinced and so.
Grumpasaur. It's Mr. Grumpasaurus.
I think it's either the COVID or the vaccine. It's affected my mind.
The real Zach has come out, which is good. So I will see you next week, and thank you everyone for watching.